Hey guys, what's going on? So for you guys that have been following the channel, I posted this video and this review just a couple of days ago on the 4th. It's the 6th of October now. So I did this quick review of InTheMoneyStocks.com verified investing alerts. And it was a pretty good review. I think I jumped in, I looked, and I think everybody with this service starts to look at the track record. I'm just scrolling down to find it here. I'll leave a link in the description so you can come and check out this whole review, because this is really going to be an update on what else I've found when looking at this service in more detail. And so on their website they have these trade signal results, and on the face of it they look amazing. You're like looking through them all green, 10%, 13%. 11%, 20%, and you're looking through, and I did the calculation, and it's something like the 90% win rate, which I talked about in this video. I'll put a link. You can go and check this out. It was the first video I did all about this service, and really today's video is just a kind of update on a little bit more when I dived a bit deeper into what this service is really all about. And so the track record on the face of it looks amazing. It looks like they're swing trades, it looks like they're pretty chilled out, and it looks like you only make some small losses if you take these trades. So here's me logged into the dashboard. As you scroll down you can see the odd red, -4%, obviously totally dwarfed by all the green. Here's a couple of 4% losers, here and here. And so it all looks great in the face of it, and that's why I signed up for this service. I thought the track record is absolutely outstanding. I think I'm going to give it a shot. Unfortunately, with a little bit more of a deep dive into this, there's a lot of inconsistencies and problems with this track record. So I've added a section to the bottom of this review which goes through those. I'm just scrolling down to find it here. And then we can talk about it a little bit in the moment. So the problem with signing up for InTheMoneyStocks.com is the track record is pretty misleading. So I put together a spreadsheet here looking at the last 50 trades. So on the left here we have the last 50 trades. I don't want to do all 1,000 of them or whatever it is, so I just took a random sample of the last 50 trades. And so the first thing people are asking me is, well, how long are you going to be holding these for? So in this column here, they're all swing trades. I put the number of days, so you can see first few are like 12 days, and then some were 1 days, 20 days, 150 days, 130 days, 130 days. So these are pretty long holds. So I kind of summed up what I found here. So the average hold day for the last 50 days of results has been 31 days. Sorry, not 50 days. It was last 50 trades. So the average hold time was 31 days. So the average is obviously, it can be a bit misleading because it can be really skewed by a whole bunch clustered at one end of the scale, like really long holds or really short holds. So it doesn't tell us a whole lot, because really what we care about is things like how many trades were under 10 days. And out of the 50, almost half of them were actually under 10 days. So that's a good thing, right? That's good. However, 10 of the 50 trades lasted more than a month, and sometimes more than 3 months, up to about 5 months. So you have to realize that 20% of the trades you take in the service, you're going to be holding for months and months. A lot of them you won't be, some of them 10 days, some of them 20 days, but some of them you're going to be stuck in for months and months and months, which is, maybe not the best. So these were closed positions that I looked at. And so like the open positions I also looked at, he still has some from 2020, 2 years later. So it's a small portion, only 1% he's been holding for that long. But it's still not negligible if you've got, you've got to be really careful about how you allocate your portfolio. 6 are still being held from 2021, so 3.8% of all his trades recorded. And still 20 of them have been held since the start of 2022. So this kind of gives you a little bit more of a feel. It's like some of these are, maybe half of them will be under 10 days, but some of them you're going to be holding for weeks and weeks, if not months and months, and some of them for years. So you got to be really careful when you're considering this. And part of the problem is you've got to allocate your capital properly, right? So he suggests only putting 1% of your portfolio into each of these. But it seems like what he does is he averages down on the losing trades, so you can end up pouring more and more of your portfolio into the losing trades. which you could also be holding for months. So that's like a problem. It definitely makes it a little more difficult to really gather like whether these will be profitable for you or not, because you're never quite sure whether you're going to average down with another percent of your account and another percent of your account. And the biggest problem I see with this is there isn't actual overall numbers stated. So if we go back to his track record, let's see here. So we're scrolling down and we're looking here, and the first one we come to is this loss of -4%. The problem is what we don't know is how many times did he average down on this before he took that 4% loss. This position size on Apple that was a loss could have been a massive chunk of his portfolio, which would have wiped out a lot of these wins. And you've had to hold it for 2 years. So it was opened in 2020 and it was closed in 2022. So you're tying up a ton of your money potentially here, and that's not clear in the track record. So this could be 10 times these wins, right? And you've locked that money up for 2 years. So even if you have a really big account and you're good at allocating your capital per trade, you're still probably going to find that you can't quite replicate what these guys are doing. And so that's the sort of the good side of the bad stuff that I've found, right? So I've written some of that here. There's multi-month trades. It's very difficult to predict how much margin you're going to need or how much capital you're going to have to allocate and for how long. So the track record is a bit misleading in that way. But it gets a lot worse. So as one of the guys in the Facebook group pointed out, they recorded a Netflix trade on the 20th of March. So March, April, May, April even. And the price was never around 189, which is what they have it listed at. So either they didn't write it down properly or they just made it up. Either way, it's a little disturbing because it is skewing the track record significantly, not just that trade. But I found several, including one recently, that is also clearly incorrect. So again, the track record does not represent what you would expect to achieve when you look at it, which is what attracted me to the service, right? I thought this is ridiculous, this is crazy. And because they're swing trades, I didn't think there would be anything weird like, them front running or anything like that, because, it's not that style of trading. But what I wanted to show you is even recently, this trade, which was probably a week or two ago now, OKTA, let's have a quick look at it. So this is just one of so many examples of oddities. So I'm just going to set this out so we can see the 22nd. Let's see where the 22nd is. Have to go back here. So here's the 22nd of September. So 9:22. We go back to here. So entry was 9:22, and they're saying 53.50 was their entry. 53.50 is down here. So there's multiple instances of this throughout the whole track record. So they're saying they entered at 53.50, which just can't be correct, right? Either the date's wrong or they put the wrong price in. But there's so many. There's the Netflix example. I found another dozen or so, including this one, where the entry prices are just much lower for the longs than you could possibly have gotten on that day. So even though that might not be a huge issue, right? So maybe they only got 55 here and then he wrote it to 60. It still just completely destroys their credibility in terms of these numbers. And so at that point, I can't really recommend the service. I mean, why would you, if you can't trust the track record, and there seems to be glaring errors, whether intentional or not, I just don't recommend this service at this point. The only thing I'm really enjoying about it is the daily videos. They're really good, very, packed full of good information that I enjoy listening to. But in terms of actually purchasing this service based on the track record, I would advise against it. I don't think this is a true reflection of what you'd actually be able to replicate. And the three main parts of that is capital allocation, You're going to be holding these things for months at times, and you never know. And so you're going to end up averaging down, piling lots of capital in, and then potentially taking a huge loss, even though it looks like a small percentage loss in their track record. And their percentage gains are off. There's several mistakes that I've found there that don't quite make sense. So you're never going to be able to replicate their track records. And for that reason, I can't really recommend this service. Anyway, hopefully that's helpful, and I'll talk to you guys soon.